1 out of every 3 shillings that Kenyans paid in form of taxes last year was used to pay interest for the country's debts. And with the country's debt stability widening by the day, economists at Barclays Bank note that there's a need for the country to increase investments in the private sector to close this debt gap. Achieving this, according to the economists, is however being derailed by the cap on interest rates that has resulted to a slowdown in private sector credit growth, now at a low of 2%.
More than 1 in every 3 shillings collected in tax didn't contribute to the infrastructure that will build tomorrow, and it didn't contribute to paying sort of the salaries of teachers and policemen and others, and it didn't provide sort of social wage in different ways, saying that monetary policy is just a lot harder when you have interest rate caps and not much credit creation.
The coming into force of the IFRS 9 reporting standards for banks this year, in the face of the interest rates cap, may lead to a further decline in private sector credit growth. However, the cutting of costs by banks through adoption of technology could help lenders offer credit at lower rates.
Theoretically, IFRS 9 should mean better pricing for lower risk customers. However, the introduction of interest rate caps in the Kenyan market forces the same prices on customers irrespective of risk, which means we cannot segment the market and offer better pricing for less risky customers. Banks are doing whatever they can to adjust their cost basis, become more efficient, bring in automation, and that's why you're seeing a lot of the channel investments moving to digital, moving to automation, because I think if we can get those costs in line, then it becomes easier to actually pass on some of those benefits and be profitable as banks while still lending into the private sector.
Though Kenya's inflation is largely food-driven, the current high fuel prices, which are at the highest level since mid-2014, are expected to pile inflationary pressures on the economy. These notwithstanding, economists at Barclays Bank are projecting a 5.5% economic growth for the country this year from the 5% recorded last year. They believe the shilling could also weaken to a low of 106 to the dollar.
We expect inflation to fall into the 2s into the next several months, but then rise again to plus minus 6. And then for that shilling, 106 against the dollar for the end of this year, 108 and change next year, and if you're thinking that far out, the end of 2020, sort of something around 110 and a half, 110 and a little bit more, but very modest levels of depreciation.
Nicholas Ndwati, News Hour Business.